Hello, everyone. I hope you're all having a great week. My name is Drew, the host of Never Behind, and want to share insights from well known investors or investors that have been in the market for a long time with plenty of experiences so that they may provide insights of the market that may help you with your personal investments and never be behind the trend. Today, I will be sharing the second half of the interview with Chris Vermelon, founder and chief market strategist at the technicaltraders.com and one of the best traders in the market. Oh, and I wanted to share that Moomoo is having a great promotion, giving out 16 free stocks, including either Tesla or Google. Now, if you open an account and deposit $100 and keep it in the account for 60 days, you get 5 stocks. And if you deposit $1,000 and keep it for 60 days, you will get a total of 15 free stocks. And if you deposit $5,000 and keep it for 60 days, you will get 15 free stocks plus either Google or Tesla. So if you want to receive a potential of 16 free stocks, make sure you click the link in the description below.
For yourself right now, are you positioning a lot of your asset in cash, or are you parking your money in the treasury bonds or bills, accumulating a lot of money with the
Mhm.
5% yield? What's your strategy at this point?
Yeah, so we've been scaling out. So we've been long the markets for a few months. We ended up closing out our QQQ, which is our NASDAQ position, with half of our portfolio at about a 15% gain on the last portion of it. We still have a quarter of our portfolio in the SPY ETF because the SPY is still technically in an uptrend. It's holding its ground, and it's got potential to keep pushing higher. But we're 75% cash right now. And yeah, you can move into the BIL, which is an ETF that holds a 1 to 3 month treasury note, and you just buy it just like a stock, and it pays out a monthly dividend. So instead of sitting in cash, you can just put all your money into this ETF and just collect a monthly dividend cash injection to your brokerage account. A really simple way to keep growing your account little by little every month while you're protecting your capital. So your money's kind of always working for you.
So you still think that we still have that major crash like we saw in the dot-com or the subprime crisis coming, although we don't know if it's going to be after a month, a year, 2 years, but you still have that idea that we are setting up for a major crash and we are still in the bubble stage. But at the same time, I just heard you that you were long on the QQQ. So it seems like although you are expecting a downtrend, it doesn't mean that you're always out of the market, but you're following the trend. Or what's that strategy there?
Right. So we're still long the SPY. So here is my trend analysis chart. If I just show you our trend analysis chart. So here we are long the SP 500. We hit our first target. It's consolidating. We're still long the SP 500. The QQQ has rallied up. It hit our first target, our second target, our third target. It's right pretty much where we exited the play, and it's actually giving us a sell signal. We're not going to bet against the market. We're not going to short the market or buy an inverse. Right now, what we're waiting for is potentially consolidation through here, and maybe we're going to get another buy signal somewhere in this range over the next week or so that we could get in and try to catch another push up as the stock market rallies. I really like it when we get a sell signal because, first of all, we had scaled out of the play. Typically, after the NASDAQ has a very strong momentum move of 15%, it'll usually have some blow off top. It'll correct and give us a sell signal, and it allows us the opportunity to reload, to put half of our portfolio back into the QQQ once we get a new buy signal, and we could see another 5-10% rally in the QQQ and allow us to grow our account. So from the growth side of things, the growth stocks are actually on a sell signal right now. We don't want to be holding them, and we actually got out of growth stocks a while ago, about a month and a half ago, maybe even 2 months ago already. The whole strategy that we use here is we're playing the odds, we're playing trends, but once we hit certain thresholds, we actually start to close out positions, and we wait for the market to reset so that we can put our money back in when it's fully re-energized and ready for another one of these really strong legs to the upside. And that's what we could see here. We could get another big leg pushing up to potentially hit a double top or hit all-time highs, and that'll be great for us because the nice thing is we follow trends. We use technical analysis. We only follow price. So if it starts to go back up, we get on, we ride it higher, our account grows. When it starts to stall out and roll over, we're out of it. And eventually, if it falls enough and the trend is down for a long period of time, we'll actually benefit from falling prices. But that's kind of how we see the market right now. Growth stocks are struggling, and they're not the play at the moment, whereas the SP 500 is actually still holding its value and not showing signs of big distribution selling, because the QQQ has showed a lot of high volume selling on the charts. If we look at the daily chart here, you can see this the bottom volume chart here. Over the past month or so, most of these big spikes are red, and there's a lot of selling going on in the space. So there's definitely big institutions, big money kind of getting out of this sector. I mean, it's been a very strong market rally this year. And typically after a big, strong rally, we have a big type of correction as well to cleanse the market.
Sounds like you don't pay attention to the news and it's all about the charts, and you have your fundamental that you follow. So you're getting away from, I guess, the noise is what you're trying to say.
Yeah. That's the biggest problem, right? It's the emotions of the traders. Emotions. Right. I mean, again, we did a big survey. We had over 5,000 responses from active traders and investors. The number one thing is their emotions are in the way. Like constantly, they get into a trade, we hit a profit target, they don't want to get out. They're like, why do I want to get out of it? It's making money. And then we get into a trade and it starts to go against us and our stop gets hit, and they're like, well, I don't want to get out, I think it's going to come back. You liked it before, I think it's still good. I mean, you can't get around their brains. It's really difficult to get people to follow. Like I say, if you got stopped out, you should pat yourself on the back, because that means you're following rules. That means you're committed to a process. And if you can't get stopped out, or you get angry when you get stopped out, you need to go do a reality check of what trading is. Getting stopped out is not a bad thing. It is a good thing. It means you're protecting your money, you've got the rules in place, and you have the self-discipline to follow it. Most people don't have the self-discipline to be able to make hard decisions. And trading and investing is all about hard decisions, and it's always going to be against what's on the news and the vibe in the air. You're always going to feel like you're missing out on something. You have to do the opposite side. People are always going to be looking at you weird when you say you're doing something, because you're generally against the group, right? So trading is difficult. It requires massive self-discipline, and that's what I try to help everybody with. I mean, I update them daily or weekly, and we do mentoring sessions with subscribers, and I try to just constantly be like, all this stuff happening, you probably feel like this. I know how you're feeling because I can feel it, but I can suppress it and overcome it. I get excited about these extreme conditions, but a lot of people just can't get outside of the box to look in at the average investor's emotions, and they get stuck in it and they make the same mistakes even when they know they shouldn't be doing it. They just can't control themselves. It's human nature.
Wow, I think that really kind of touched me. Where I had the same feelings where, whenever I buy big or buy, stocks, a lot of people around me say, you're stupid, the market's going down, that you shouldn't be investing. And then, after a few years, it turned out to be a good decision. But I think what you're saying, I agree on what you say, where whenever people are going this way, I try to go this way, but it's really hard emotionally. But I think you get to a point where you start to get excited when that happens.
For sure. And I do. And a lot of my subscribers do.
Before we wrap up, I just wanted to see if, you could share with our subscribers how they could get your resources. I also know that you have a very exciting investment event or live event in Canada, Toronto, I think, in September. Can you also share that as well? I think a lot of people might be interested.
Sure. Well, people can go, they can visit my website, which is thetechnicaltraders.com. And we've got my trading strategies here to follow. And we've got auto trading. So if you don't have time or you don't want to learn the markets, it can be executed in your trading account for you, completely hands-free. I don't charge anything for auto trading because I believe if we can get the trading out of the hands of the trader, they'll do a lot better, because you don't skip trades, you don't start bending the rules and things like that. So, auto trading is pretty straightforward. You set up the brokerage account, it'll automatically trade for you. That's kind of the whole focus here is, how can I make people protect and grow their wealth without them having to do anything? This is like having almost like your own business running on the side. It runs automated. Again, in Toronto, September 8th and 9th, I'll be at the Money Show down in Toronto presenting and talking about asset revesting, which is my style of investing. I've published a book on this, which is actually, you can go to our website or Amazon. And asset revesting, this is a style of investing where if you're an active trader, this is going to feel fairly slow. If you're a passive investor with a financial advisor, this is going to feel a little active. So it's right in the middle. It's probably one of the reasons why it works so well. It's just a time zone and a style of trading that is definitely outside the realm of what most people do. It generates incredible returns and is a very straightforward way to trade. So that's where people can learn about it or contact me if they have any questions.
Thank you very much, Chris. I'm pretty sure a lot of my subscribers, your audience, will visit your, it's it's free email, free updates as well, in addition to your mentoring. So I think it's very valuable. And I think a lot of people would be interested and hope they get a lot of help from your valuable resources. So, thank you very much again for your time. I know you're really busy with your event coming up, but thank you very much. And again, it's really an honor to have you on our channel, and we'd love to have more of these interviews on the update of the market in the near future. So thank you very much, Chris.
Sounds great, Andrew. Take care.
All right.